Welcome to the daily update, where I'll go over the action in the market for Monday, December 2nd, and we'll see how things look for Tuesday, December 3rd. Had a slight up day. We actually saw growth, the mega caps and the S&P 500 do better than the rest of the market. If you look at everything together, it was kind of more of a negative day, but we've been concerned that the mega caps growth have been underperforming lately. Well, they looked a little bit better in Monday's session. We'll see if we can get any more follow through with that. We still remain positive in the short, intermediate, and long term. There's a lot of stuff going on as far as the news, and for the most part, the market's really not paying attention to that. There's news out of the Middle East. There was some developments in Syria over the weekend. Of course, there's the whole presidential pardon thing. But none of that seems to really be applying to the stock market for right now. We'll see if that will change. There is a thing called the SPX Investing Program. It is up and going. It's free until the end of 2024. Had some good positions that were closed out both last week and in Monday's session. These are trade ideas that I do a video about that you can modify and make some of your own ideas, at least the basis for that. I don't tell people what to do. I just give you ideas and then let you form that into your own personality because I really believe in critical thinking rather than just trying to say, do this, do that. But feel free to check that out. I do post a video for every trading session about the ideas that I have. You also have first access to the videos that I post, like this daily video where I hold those back on YouTube and Rumble. There's a link that'll take you to a video. Here's an email address. If you have any questions, you're more than welcome to contact me. Also, the daily video, as I say in every video, is the real foundation of the analysis that I do. We just finished the weekend. I did the outside weekly videos in the circle. Supplemental videos are more on an as needed basis, but everything ties into the daily video. Okay, so let's go back and talk about what happened and then look at some charts. We had kind of a flat open. Now we were down a little bit with the futures, but by the time we opened in Monday's session, we pretty much came back to the unchanged level. And then we were able to chop higher to R1. Now there wasn't an awful lot of conviction, but there was a positive bias as far as the S&P 500 is concerned. And R1 was at 60.50. Then we pretty much stayed right around R1. We went a little bit above it, we went a little bit below it, and then we ended up closing slightly below R1. We were up 0.24% on slightly below average volume for the S&P, and we are positive, as I said, in the short, intermediate, and long term. We are seeing where a new trend is beginning to develop, and we're seeing that converging on a lot of different time frames in the short term, in the intermediate term, and even on the weekly chart. All of those are showing a trend developing that's getting stronger. And with the green line on top, we are positive with that. And I'll show you some charts there. Interest rates were up a little bit in Monday's session. We'll be getting some more employment data later in the week. We're also going to be getting some in Tuesday's session. And just all the geopolitical stuff, the confirmation, what's going on, really not much of an impact right now. Okay, so we did close at another all-time high for the S&P, not for the Dow this time. It closed at an all-time high on Friday. It was down slightly on Monday, but the S&P 500 is closing again at a new all-time high, where we saw mega caps, semiconductors, and growth actually doing better than the rest of the market. And then there was some Fed speak that came out. Atlanta Fed President Bostic, who is a voter, said that conditions on both sides of the Fed's mandate appear to be broadly healthy. Okay. And then Fed Governor Waller, who's not a voter, said he's leaning towards supporting a cut to the rate policy rate at the December meeting. Now, the market could have just shot up on that, but unless it's Chairperson Powell, the market sometimes it will react to that. In Monday's session, it really didn't react to that. We do have a non-confirmed Hindenburg Omen. Now, be aware, there are perma bears out there who are treating this Hindenburg almond as though it's a done deal, that this is a legitimate signal. According to how you're supposed to implement that, we don't have a confirmation yet. So, and I will certainly report on that if we do get a confirmation. But Hindenburg, bad, crashing, big Zeppelin that blew up there. And there have been times when this signal is legitimate, other times when it is not. But the perma bears just love it anyway. Now, on a short-term basis, I have kind of a long list here with the CMB composite. It's coming down, but it's still looking extreme. And then our usual short-term indicators, the Stochk RSI, the Williams percent R, the CCI 14, and now we have the 20 on the list as well. The stochastics, or the boom indicator, we're getting kind of far away from the 20-period moving average. The RSI short term based on 9 periods, and then the 20-period simple moving average study of those stocks in the S&P 500. Intermediate term, the Sean trend meter, which is going up again. It's getting even a little more extreme positive. And then we have the bullish percent indexes for the S&P and the NASDAQ 100. And no changes here to the scenario. It was kind of hoped when we had core PCI come out last week that maybe there would be some updates here, but not really. We're kind of getting closer to that December meeting with the Fed and wondering, okay, is there going to be another 25 basis point cut? And we're watching all the economic reports as they're coming out because we get a lot of strong reports and that could throw that rate cut into doubt. The dollar was up and interest rates were actually they were up here. I should have changed that. We closed at 4.2% with the 10-year yield, where after Friday we were at 4.18%. We're still inverted with the 10 to the 3 month, and that still has a ways to go. It's actually dropping down and becoming more inverted, where we're getting close here. We're just a tick or two away from the 10 to the 2 year going inverted again. So I'll keep an eye on that one. We are still positive as far as sentiment. We're at 67, where we had been at 66. And we are now trending. Okay, let me clear my voice there. We are now trending. We are positive. We have the ADX above its moving average. It's also above 20. And as I said, we're seeing that in the short term, intermediate term, and the weekly chart are all coming together now. The bias is positive since we had an up day, and the momentum over the last number of days continues to be positive as well. All right, we did get a few economic reports, and I don't have a chart of this one. The takeaway is what is the reading here? This is the S&P Global Manufacturing PMI. We're under 50. That just shows contraction on a global basis, where last time we were at 48.5. So we're up from the previous reading, but we're still below 50 there. The big one was the ISM Manufacturing, also below 50. Now we're going to get the services report here later in the week, but we're coming in at 48.4. They expected 47.6. So it was stronger than expected. And it was also up from 46.5, but it's still below 50, showing that there's contraction in the economy. And then construction spending, quite a bit stronger than expected, coming in up 0.4%. They expected it to be up 0.1%. Last time it was up 0.1%. All right, here is the ISM index. The blue line is what we look for the total reading, and it's actually going up. But then the orders that you see here is the yellow line is actually going down a little bit here, so showing a bit of a contraction there. But the takeaway is that both of these lines are below 50. And then the ISM prices and deliveries going down with the prices, pretty much flat and slightly going up here with the deliveries. And then exports versus imports. We're going down a little bit here with the blue line. We're flat with the imports. And this is just the change month over month here, where we did see it go up. A better reading than what we saw previously, but still below this magic level of 50. Construction spending year over year, even though it was up stronger than expected, when you take it on an annual basis, it still continues to decline a little bit below the 5% level. And private construction spending, we look at residential, which is going up. Non-residential is going down. That's the yellow line. And then month over month, where we did see a big increase in the reading here. Then a few charts from Isabel Net blog charts, and I know I have the cursor in here. There was an update to the software that I use. I have since turned off the ability to grab my cursor with this little pointer here. So it says here 6,000 is here now what? So what do we look like? What do things look like going forward here? We're a month out after of course, we've never been above 6,000 before, but these are just major milestones that the S&P 500 has had at any given time going back to 1968. And a month later, we're up 80% of the time, as we are 3 months later. We're up 100% of the time 6 months later, and up 80% of the time a year later. So that bodes well. Strength tends to lead to more strength until it doesn't. Now, how's that? Yeah. And we see pretty decent returns. A month out, we're looking at the average return of 1.1%, 3.9% 3 months out, 7.7% 6 months out, and 8.6. And then you can look at the median here as well. All right, then US equity valuations had some structural tailwinds, but have overshot recently. I go over this in the intermarket analysis video. We look at the Shiller PE ratio, which is a variation of the backward-looking PE ratio that we use based on earnings that have already come out. And these are going up, and it's just showing that the market is overvalued here. And Bitcoin ETF demand remains consistent. All right, well, okay, this is a Bloomberg chart here. There's money still going into it. Of course, we're still trying to get above that 100,000 level with Bitcoin itself. And I've been keeping an eye on this, and I go over this in the intermarket analysis video on the weekends, where we compare things in the US with things in Europe. And the stock 600, that would be like their S&P 500. Now, every day there's a video that I go through the stocks 50, which would be like the Dow version. Well, this is a broader market measure, and it's just taking a ratio between the two. When this is going up, that just means that US stocks are really outperforming. They have a trend line in here, and we're getting kind of the high end of that, where Europe hasn't been seeing a lot of the strength of what we've been seeing in the US. And then S&P 500 stocks net call volume, and then they break it out in different sectors here. A lot of money going into calls. This is a way to participate in either sectors or stocks or indexes when you think it's going to go up, where you use put options if you think something is going to go down. And overall, more in the defensive areas. And that we want to keep an eye on that because that's what a lot often will happen before the market sees a downturn. But so the blue line is going up, but we're seeing the mega caps coming down a little bit here, and this looks like rainbow spaghetti overall. But the thing that really stuck out to me were the defensives right now. But we've already been keeping an eye on that one. And then 2024 is set to enter the Bulls Hall of Fame if we finish up strong for the whole year. That would be another one for the books and back-to-back 20%. Of course, now a year ago, everyone was saying, well, we were up 20% for 2023. There's no way that's going to happen in 2024. And now they're starting to say, okay, well, it might happen in 2024, but it'll definitely not happen in 2025. I don't get into that kind of forecasting. We look at charts, we analyze things where they're at, and take it for what it is at this time, realizing that anything can happen. Okay, we expect more Fed cuts. That was kind of a weird one. Through the first half of 2025. Okay, so this is Morgan Stanley just saying that for whatever reason they think that there's going to be more rate cuts than historically what has happened and what the market thinks is going to happen. Somebody must have had a really nice Thanksgiving there. Okay, now there is one interesting chart here because we've been keeping an eye on the semiconductors, and this is Chris Schiavocco. I would highly recommend watching his weekly video, especially if you are a longer term investor. He puts one out every week. There are a lot of interesting studies that he does, and it's one of the more useful videos that I've been able to find, where almost all the other videos I run across are garbage and really not helpful. They're just telling you their opinions. I take the same approach as Chris Schiavocco as an educator, where we take the weight of the evidence. And it's like we look at as much information as we can and then reach a conclusion that way, which goes against what's taught in most technical analysis programs, where you have this analysis paralysis. No, I don't look at that way at all. Most folks that are starting out new in the market are not successful longer term. You might have a good run and think you're a genius, but over the long term, you're really going to have some problems. I've been doing this coming up to almost 4 decades now, and I started out by just having a few favorite little indicators. And then I just said, this just isn't working because these indicators don't work all the time. So I changed my whole approach and he calls it the weight of the evidence. I call it the consensus approach. Well, he posted a chart here on Twitter where we're still making a stand here with the semiconductors because we're concerned about that. And the chart right after this is I showed it over the weekend. I've been showing it in the daily videos where we've seen a recent death cross here with semiconductors. Now, this is a different index. This is the SOX, and you go back over here. This is an ETF, a semiconductor ETF. But they so far we're holding above this longer term support, and he's using anchored moving averages to do that. So it would be nice if we could get back up. If we really start to break down here, that's going to cause some concern for the market. Now, we did have some news breaking last week that there had been some restrictions placed on companies doing business with China. Then last week they came out and said, well, we're not going to make those restrictions as stringent as we had originally said. And that's why we're seeing a little bit of a bounce here. And this was putting semiconductors under pressure lately. If that can actually see some follow through as far as being more friendly to the semiconductor sector, and then we can bounce up out of that, that's really going to help the overall market. Okay, and then here's the semiconductor. Where lately we've been coming back up, but we're still below both of these moving averages here. Now, usually I would show this chart way late in the video, but because of the two charts, I wanted to put them together. All right, here's our intraday chart. We pretty much a flat open. It wasn't really all that of an exciting day. We ended up kind of chopping our way up to R1. Then we hung out below R1. We tried to break above R1 only to close back down below R1. And not really seeing much of a change here in the initial overnight session. We did see a nice little repairing of the futures where we had been negative. We started trading Sunday afternoon or evening, and then they just kind of clawed their way back until we got to the opening of the cash session right here. And then you can see the advances that we saw during the day. This is an improvement here. Large cap growth. We have the blue line above the red line. That's what we want to see when the market tends to be more powerful here on the intraday chart. And we did see an improvement here with S&P growth to value with the intraday ratio. It had been really coming down. That was causing us some concern. We are seeing some improvement here. Now the next question is, are we going to see more follow through with this? On the end of day basis, we had growth was up pretty strong here, where value was actually down for the large caps. It was down less for the mid caps and up, but up less for the small caps. It's large cap growth that we focus on mainly for the impact on the S&P 500. So a little bit of an improvement here with the end of day small cap growth to value ratio and the mid caps actually showing a little bit more of an improvement here. Not really breaking out, but turning back up when we look at S&P growth to value and look at the end of day ratio chart here. And coming back out of the rainbow to the top end here, when we look at the growth versus value ETFs, we want this to keep going up if we're more positive on the market. And seeing a little bit of a recovery and actually some really good strength lately when we look at the ratio between discretionary and staples. Large cap growth was up and just barely setting a new all-time high. They were the best performing area in Monday's session. And so here is the trend where the black line, that's the ADX. That's where everything starts with this chart, the dark black line here. And we're crossing up above the moving average. Okay, that shows that there's a strengthening trend. And now we're starting to cross above 20. That means that we are in a trending environment. And then the green line is on top. So we are looking at an intermediate term positive trend just beginning right now. And then short term, seeing the same thing, crossing above 20, crossing above the moving average with the green line on top. So short term. And I don't have the weekly chart here. Feel free to check out the weekly video if you want to see that one. And we are below average with volume, at least for the S&P. Then as far as sentiment, we get this every week. We're coming in at 81.38. Now this is suggesting that sentiment is too positive. We're not seeing that confirmed by the other charts that I look at. And then this is delayed. Usually I put this into Friday's video because it comes out on Thursday. Well, there was a closed market on Thursday. We're getting kind of high here with the investors' intelligence coming in at 3.46. That's a pretty high reading. Now it could go higher. But when we get above three, we're just making note of that, meaning there's a lot of people that are recommending that write newsletters and do websites that people get into bullish positions. If this goes all the way up to four, that's when we're going to get really nervous, but we're not there yet. And then looking at the legal insider transactions ratio, seeing this going back up, which could be slightly bearish for the market. And then we have the legal insider buying ETF. It's been chopping around for most of 2024, just coming into the higher end of the recent range that it's been in. So we look at the VIX, where it was pretty much flat here on the line chart as well as the bar chart. We did see the VIX of the VIX tick up a little bit with the bar chart and the line chart. The momentum for the VIX continues to be down for right now. I guess we did have a little lower close with the VIX here. And that's typically what we see this time of year. This is the seasonality of the VIX, which if this is going down, that means stocks are going up. We're still getting a really high reading with the skew index, which again is a variation of the VIX. It just means the market is anticipating a big move that to this point has not happened yet. And we don't know if that's an upward move, downward move, or just a continuation. And we declined with this fear gauge where we were up with the other fear gauge. So seeing some contradiction there. We're going up with the equity put call ratio on the daily chart, and we're starting to go back up on the 5-day chart and the 10-day chart, which could be negative for the market. That just means more hedging is going on now. And here is the 10-day chart as well. And then here, this is just a longer term look at the 5-day moving average with the 10-day just barely ticking back up. And we're going back up. It's still getting a low overall reading when we look at volatility risk premium. This, again, is just predicting 30 days out into the future that they don't see an awful lot of risk at this point. It came down a little bit with the advanced decline line based on price. Even though the S&P set an all-time high, that's not confirmed by the advanced decline line. And that's mainly because it was just a few stocks that really drove the index higher. And seeing a really solid reading here based on volume. And really a contraction of the new highs, but we are going up with the 5-day and the 10-day. And this is looking healthy overall, a lot more green than red right now. But again, it was just a few stocks that really drove things in Monday's session. And still getting kind of a high reading here, but we're positive with the accumulation distribution. We're above an advancing moving average. And we actually declined a little bit with the advanced decline ratio 19 and 39 period, but we're still above zero. This is looking pretty good though. The Chaikin money flow going up with the green histogram and the red lines also going up. That's another smart money indicator. But this is a warning sign. The Chaikin oscillator. It's like, okay, I don't really like what's going on here. And sometimes this can be a valid warning to us. So we're just going to keep an eye on this for the time being. And we did see a bit of an improvement with the vortex, with the green line turning back up and the red line declining slightly. So not much of a change here with the cumulative advanced decline line for the S&P based on price, but we did set a new all-time high based on volume. And that can be positive when volume leads price. Actually, a bit of a decline here with the cumulative advanced decline line for the NYSE, but looking pretty solid here with the regular NYSE advanced decline line. Declined a little bit here with the other NYSE advanced decline line. And looking good still when we look at the common stock for the NYSE based on price and coming down just a little bit more based on volume. So our advanced decline line's a little bit down here with the NYSE common stock. Did decline a little bit with the S&P, down a little bit with the mid caps, and we were actually up with the small caps. And we're still getting a very high reading of those stocks inside of the S&P above their 20-period simple moving averages. And that just suggests good short-term momentum. When we're above 70 here, this is where we get that conclusion about the momentum being solid. Declined a little bit, but still positive with the 50-day moving average. We were flat with the 100-period moving average and flat with the 200-period moving average. In short term, we were down just a little bit below the moving average here based on volume, but we are setting all-time highs, and that is pretty positive there. We're no longer extreme with the 20-period exponential moving average on the S&P, declined a little bit with the 50, and we're flat with the 200. This is where we are looking a little far away from the 20-period moving average. The boom indicator is giving us a reading slightly above 100. And then we have the Stochc RSI, which is looking extreme or showing good momentum, as is the Williams Percent R, CCI 14, and the CCI 20. The stochastics looking extreme across all time frames, short, intermediate, and long term. Still looking positive and above the midpoint with the force index. We're still above the blue line and the green line here with the condition of our short-term trend based on 20 periods. Still well above the simple and exponential moving averages. And not extreme here with our standard deviations chart. We're right at the border between the +2 and +3 channel. Well, more extended is if we get up into the +3 channel. Coming back up after it had been declining with the balance of power, but we're still above zero. That's positive. And coming down, but still extreme with the CMB composite. The intermediate term trend still looking solid. We have the red line and the blue line going up and prices above both. And we're above all the moving averages here with all the moving averages continuing to go up. We're positive with the go, no go with the darker blue bars, starting to turn up a little bit more with the highest high value chart. That's positive. But this is something that's a little bit of a concern for the last couple of trading sessions. We've been going up with the S&P, but the TTM squeeze is coming down and actually turning darker blue, which it's picking up something negative. And a little bit of a bounce off of the unchanged level here with the ease of movement after it was in danger of going negative. A little bit of an advance here with the Erin indicator, with the oscillator being above zero. That's positive. And coming down with the S&P McClellan oscillator, but still above zero. So when we're above zero, we're still going up with the summation index based on price and volume. So this is more intermediate to somewhat long term, looking positive. Also, a little bit of a decline with the NYSE McClellan oscillator, but still above zero. So we continue to go up with the summation index based on price and volume. This is also another warning sign. The Swenlin trading oscillator declining based on price and volume. And we saw this after Friday too. Now this is still positive since they're above zero, but the fact that they're continuing to decline as the S&P is making all-time highs, that's a bit of a concern to us. But momentum, we are positive. With the PMO, we're going up with the PMO based on price and volume, but we're coming down with the PMOs that are rising. Again, you got the S&P setting an all-time high, and this is coming down. We're also starting to turn down with the buy signals. We're still going up with the PMOs that are above zero. And this is another concern in the short term, where we're dropping and declining now with the slope oscillator, although we're setting an all-time high with the S&P, but the MACD is still looking quite positive. So we're rolling over here in the short term, but that's not being confirmed by our other short-term oscillator, the TSI. It's still going up. So we're seeing a contradiction here. In the intermediate term, we're looking positive, and we're also looking positive in the long term with the TRIX and KST. But then we have the Koppik curve, which is further dropping below its moving average and now declining. Showing trend meter coming up to this dark green area, showing that we're extreme positive now and declining, but still above 50 with the ultimate oscillator, also declining slightly with the money flow. And on balance volume, though, so since we had an up day, all of the volume goes over into the positive camp there. And Pring bottom fisher, which did generate a signal here, which is not really what it's supposed to do, but for right now, it looks like a legitimate signal. And we're getting a little extreme with the short-term RSI, where we're still looking more positive with the RSI 14. We are positive with the Elder's Impulse system for the S&P. The dots are still underneath with the parabolic SAR. That's positive. And we actually declined a little bit with the bullish percent index for the S&P. Little bit of a concern there, setting an all-time high with the stocks inside of the S&P actually generating more sell signals than buy signals. But we're still looking good here with the NYSE bullish percent index, and we were flat but looking extreme with the NASDAQ 100 bullish percent index. Then here, this is a longer term chart that I showed over the weekend. We just want to keep an eye on this. And what I did is I just drew a basic trend line from this low back in 2009 to this low after the COVID crash. And then I just did a parallel where, so some of these we go a little bit above it, like in late 2021. And then you have a midpoint here. And this just gives us kind of a reference point. Are we looking more positive or negative? Well, we're coming up to the high end of this trend channel now. Now, we could go above it like we did in 2021, but this could also end up providing overhead resistance. So longer term, we just want to keep an eye on this one. But we're looking good as far as the trend when we look at the Heiken Ashi with the open candles. We're pointing up with the Kegi chart. We're positive with the Renko chart and positive with the three-line break chart. Then long term, still looking pretty good here. We're below 400 with the 150 and 200 period simple moving average study. Positive across the board still here on all time frames with the Keller market model. No changes here from Friday, where we're still negative in the intermediate term with bonds based on price. Commodities are negative on all time frames. And we saw some positive things happening here with Canada. Seems to be just partying it up with the S&P setting a new all-time high. We got the Nasdaq above, well, it started at 19.3, then later it was 19.2, 19.1, setting a new all-time high. Dow setting a new all-time high, but it didn't close at the all-time high where the S&P 500 did. We're seeing the dollar really looking strong again here with the moving average crossover. The BPI, it's still above 70, but it did decline a little bit, and we're setting a 4-year high with the S&P. So a lot of positive things are happening. We're just seeing a little bit of weakness under the surface. Tech, discretionary, communication. These were the three strong areas. Now we want them to do well, but all the other sectors ended up being down on the day. That's why I said the large caps and growth really outperformed. No real big change here other than the fact that we went up with the S&P 500 weighted index. We came down slightly here with the red line, the equal weight S&P 500 index. Now this is a confirmation here. We're setting an all-time high with the S&P, setting an all-time high with the Nasdaq, and the equal weight setting an all-time high here, even though it was down slightly, but we did set an all-time high here on Friday. The reason I bring this chart up is we did set an all-time high here with the QQQ equal weight. So now there's confirmation, where over the weekend I was pointing out that this was a non-confirmation. Now there's a confirmation. Okay, the Dow was down 0.29%, and it's gone from positive to neutral with the Elder's Impulse system. This is also encouraging. Now that we finished out November and we were having a hard time getting above this pivot point, we've been able to bust through and set an all-time high with the Nasdaq. Can that keep going? Now, just because we're beyond this point doesn't necessarily make this previous pivot point irrelevant. It may act as support, or if we fall back down, it may act as resistance at some point in the future. Now, if we keep going up, we're going to be watching this R1 pivot point and seeing a very similar thing here with the NASDAQ 100, getting above this pivot point, but still below this R1 level and setting a new all-time high here with the NASDAQ 100. We're positive with the Elder's Impulse system for the Qs. The momentum is improving for the NASDAQ 100. It hasn't quite crossed above its moving average yet, though. And we were up 1/3% with the small caps. Looking pretty good here with the other small cap index, getting a high reading with the RSI, well above both the moving averages here, and the momentum continues to be positive. And we've gone from positive to neutral for the small caps with the Elder's Impulse system. We declined 1/4% here with the mid caps, and we're still neutral here. They haven't really been participating as much. They had a nice little run up and set the all-time high, and then they just kind of been drifting lower since then. The Wilshire setting another new all-time high, another broad market measure, as is the total U.S. stock ETF, setting a new all-time high. Financial sector saw profit taking after setting a recent all-time high here. The FANG index not, let's see, not quite at it could be an all-time high here, but it had a pretty good day. These are the large caps: Facebook, Apple, Amazon, Netflix, Google, Nvidia, and so forth. And we're still kind of right in between when we look at the short-term trend line and the longer-term trend line. Not really dealing with that right now. Apple was up 0.95%, Amazon up 1 1/3%, Microsoft up 1 3/4%, showing some improvement there. Google was up 1.5%. See, when all these stocks are up, see what the S&P ends up doing. We were up over 3% with Meta. We were up 1/4% with Nvidia. My gosh, that's like an unchanged day. And Tesla was up almost 3.5% after seeing some recent weakness. So this is why the index went up. Netflix up 1.23%, not quite back to an all-time high. And we're still seeing a general improvement shorter term when we compare US stocks to world stocks. Longer term, we're starting to bottom out here a little bit, but the correlation is not all that strong. Oil continues to decline barely. It's down into the low 68s now. The dollar, we finally are seeing a golden cross here. So we're probably going to see the dollar really go down because moving averages can really lag. And it's like we see a cross and then the opposite happens. Now, it may be different here, but we're still getting a pretty high reading for the dollar. It had a pretty solid up day. And we were down, up a little bit here with the 10-year based on the yield. We were down just a little bit based on price. Seeing a little improvement here. This is what we want to see if we're more positive. The Qs to S&P starting to cross back above its moving average. We've been impressed with discretionary to the S&P starting to cross back above the moving average when we compare large cap growth to value. And so the large caps, mid caps, and even the small caps looking okay for right now with our growth to value ratios. So what's our outlook for Tuesday? We are still positive with positive seasonality. It seems like I'm a broken record there. We're going to get the JOLTS job openings. This week is the employment data that we're going to be getting, and this is one of the first ones that will be coming out. All the geopolitical things going on to see if they even matter to the market. So then on Wednesday, we're going to get the ISM non-manufacturing or services. We're going to get jobless claims on Thursday and continuing claims. And then the big report is going to be the employment situation report on Friday. And this is just showing you what the previous readings were and if they have a forecast of what they think will happen. Seasonality, not very good for Tuesday's session with the Dow. It's flat out negative, where we're neutral to negative with the S&P and NASDAQ. And then this is another chart. I'll probably have it here for a few days and then slap it over into the weekly video. December rarely is the worst month of the year. It was the worst month one time going back to 1928. Must have been a terrible Christmas that year. So December is usually stronger. And then here, I finally got this over the weekend where we're looking at the day by day seasonality here, where we do have some positive seasonality during an election year, a little bit. And then we hit kind of a rough patch as we get through about the 10th, 11th, 12th, 13th or so of December. And then it's later, that's when we tend to see small caps really doing well, and we see even more positive seasonality going into the end of the year. And this, I've been showing this for a while. This is going from before Thanksgiving to the second day of the new year. And you can pause and look at this. It's positive. Not always, but we are positive almost 80% of the time, both with the S&P and up almost 78% of the time with the small caps. And this just shows how we've been massively outperforming all the different measurements that we use. The purple line is 2024, and these are all the other ones that should suggest positive seasonality, but we're just blowing all that out of the water right now. And Tuesday is kind of a flip of the coin when we base it on 2023. It's slightly positive, but the least positive day so far in 2024. This also shows the positive seasonality going into the end of the year. This is what typically happens after the election. This is what happened after the election in 2020. So the warning signs, we're going up with the 5 and 10-day equity put call ratios after getting pretty low readings, at least with the 5-day. The Copic curve is negative, and we're getting ready to possibly see a cross here, but we're still negative with the momentum for the NASDAQ 100. And we do have a non-confirmed Hindenburg omen. And then we have a pretty long list here. With the accumulation distribution, that's looking pretty good. You could make a case that we're getting kind of far away from that moving average. The Chaikin money flow is quite positive, but we're a little bit concerned here about the Chaikin oscillator. It declined on Friday and it declined on Monday. And then the McClellan oscillators and summation indexes for the S&P and NYSE, even though they declined, they're still positive. Swenlin trading oscillator, we're concerned about that, even though it's positive. It came down after Friday and it continued to come down both based on price and volume after Monday. The Vortex showing some improvement there. Growth to value, discretionary to staples, that's looking better. And our oscillators are turning positive, but we're concerned about the slope oscillator. It's falling and it's going below its moving average, but it's not being confirmed by our other short-term oscillator. The advanced decline lines are still holding up, even though they didn't show a lot of strength on Monday. Our moving average studies of those stocks inside the S&P are still looking pretty good there. The parabolic SAR, we are extreme with the bullish percent indexes for the S&P and NASDAQ 100, where we're just still positive here with the NYSE. The ease of movement, the money flow, and the ultimate oscillator. They continue to be positive even though they declined, but the ease of movement showed a little bit of an improvement there. In the financial sector, even though it was down, it's still coming off of an all-time high and looking pretty solid. Then we have the Hindenburg-Omen thing here, where we do not have a confirmation spike at least yet. The first spike was triggered on November 20th. We have until December 19th, which is 20 trading days, to see another spike here. And as of right now, that has not happened. So, our conclusion, we're still positive. We have a new positive trend. We are in a bigger picture look at positive seasonality, but we're concerned about this. The Chaikin money flow, the Swenlin trading oscillator, some of our secondary indicators, they're not really showing a lot of strength right now. Are we going to see follow through with that? A good solid update could just take care of all of those concerns. In the short term, we are also having a new positive trend. We do have positive seasonality, but not for Tuesday necessarily. And this is where we're seeing a little bit of weakness here in the short term. Where we're seeing this developing even more is in the intermediate term. Most of the indicators that we look at focus on the intermediate term, which is weeks to months. And we're just a little bit concerned about that, but we're still looking quite positive in the long term. And based on the weekly chart, we do have a positive trend that is strengthening now. Thank you. I hope you found this helpful. I hope you have a really good day, and I will talk to you in the next video.